Good morning. Thank you very much for joining us for this podcast of the Financial Supervisors Academy. And today's topic is DORA, the Digital Operation Resilience Act, which is one of the major pieces of legislation of the digital finance package. And with us, we've got Mr. Andrea Vetrone, who is a senior policy officer at EIOPA, but also the coordinator of the joint committee of the ESAs, which is dealing with the level 2 standards of DORA, and also Mr. Decelis, who's the head of cybersecurity at MFSA. Can you perhaps introduce your experience to the audience, starting with Andrea?
Yes, of course. Thank you very much. Thank you very much also for inviting me. And it's a pleasure to be here. So I have around 13 years of professional experience. I've worked for around 8 years in the private sector, consulting and in a large multinational insurance group, working on subjects like operational risk, business continuity management, and more as broad IT risk management. And then I moved to EIOPA around 5 years ago, and I am following the subject of digitalization. And as part of this work, I worked also on the publication of our guidelines on outsourcing to cloud providers in 2020, and then I am now coordinating our work on DORA.
Thank you very much, Andrea. Alan?
So, Decelis, I'm currently heading the Supervisory ICT Risk and Cybersecurity function within the Malta Financial Services Authority. So my experience is approximately towards 23 years. I spent almost 20 years at the Malta Information Technology Agency. There I moved in different areas from service management to information security. And now I joined the Malta Financial Services Authority, and I'm currently supervising the financial sector on aspects of operational resilience.
So starting a bit with an introduction on DORA. Andrea, can you tell us a bit why DORA was necessary at European level and in what way it will make the contribute to the integrity of the internal market at EU level?
Sure, thanks. So DORA means Digital Operational Resilience Act, and it's meant to create a framework for all insurance financial entities, for all European financial entities to manage their IT risks. Before DORA, there were a number of requirements scattered around Europe covering the spectrum of the DORA requirements, but there was no harmonization, first of all. And also, as you can see, there is now the way of consuming financial services is through digital platforms. And it is important that all the value chain, all the actors in those digital platforms are resilient. And therefore, there was the need to create one harmonized set of rules for all the financial for all the financial services actors to ensure that we minimize the risk of a single point of failure. And I believe through DORA we can start working on having a more DORA for me is a kind of starting point, and it's the starting point of building a more resilient Europe, more resilient financial services in Europe. And it is the beginning of a journey in this respect, because we are still in the digitalization process of that part of the economy. So I believe that was the reason.
More resilient Europe, but what are the risks we're facing?
We are facing the risks. There are a number of risks we are facing. We are facing risks in relation to the operations of the single entity. So, for example, that an operation of a financial entity is disrupted because of cyber attacks, because of not proper management of their IT capabilities, but also we are facing systemic risks. So we are facing the risks, for example, of having concentration around a small number of IT providers, which could jeopardize the entire economy if they're not properly managing the IT risks they are posing to the financial entity.
That's a very interesting point, Andrea. Can you elaborate a bit more? So, in what way can the failure of one of these critical ICT service providers result into systemic failure within our economy?
Yes, sure. So, if you look at how the delivery of IT services works at the moment in Europe, but like we can also say throughout the world, you will see that there is a concentration around a few providers for specific capabilities. And the trend of the market is to continuously invest and increase the capabilities working with those providers. And there is the tendency of reducing then the skills also in the various financial sectors entities on specific areas because they are working with those providers. We are then centralizing everything on them, and in case there can be multiple risks. There can be risks for sure. They can become a single point of failure, so they can be the objective, the target of potential cyber attacks. And if they are not able to provide their services, therefore there will be a number of entities not being able to provide their services to their customers, to the economy, creating, for example, reputational risks for the entire sector, creating also potential financial and liquidity risks as well. But also we are having legal risks associated, legal and geopolitical risks associated to working with certain providers, legal risks such as, for example, data privacy or GDPR risks. And these are areas which, of course, are addressed by the legislator in from multiple aspects and multiple angles. But this is because we are having the economy moving in that direction. So it's very important to monitor and to create comprehensive ecosystem of resilience to ensure that that those risks are monitored, under control, and well understood by all market participants. So that's a very good thing for
Thank you very much, Andrea, and that's hence why the importance of DORA. Coming to you, Alan, we already have in Malta cybersecurity guidelines,
Yes.
which we've issued and which are applicable to the entire financial sector. What does DORA mean in practice? I mean, we're going to move from these national guidelines to a European framework. What does it
Yes.
mean in practice for the local industry?
So, first of all, guidelines are guidelines. And now, with DORA, we're going to have a regulation. So, whereas one is more oriented towards you should, okay, the regulation is a framework whereby the obligation now is clear. Maybe in addition to add a bit more into the question, at the moment, here in Malta, we chose to do a set of guidelines applying across the board. However, when you go to the actual legal framework at the moment, we have a lot of fragmentation. We have a lot of requirements spread across the single rule book. With the regulation, now we're going to have one set of harmonized requirements, which is going to be applied across the board and across the different sectors, whether you are a bank, whether you are an insurance undertaking, and the same applies for the rest of the financial services.
Thank you very much for that general introduction on DORA and what DORA will mean in practice for Maltese operators. Coming now to supervision of ICT and cybersecurity. What will change at union level and what will change at national level, starting with the union framework? And therefore asking Andrea to let us know and explain how this is going to work in practice.
Okay, thanks. So there are a number of changes. First of all, and first and foremost, the fact that DORA harmonized the rules. And this is a very important point, as was also said by Alan 1 second ago, that DORA creates a level playing field in relation to supervisory powers. So it means that in each member state, there will be the same rules and they will be supervised in the same way. This will be, of course, an effort to build the common supervisory culture, but it was a successful effort in other areas of the single rule book. So we believe it will be also in DORA to create a level playing field. Then, of course, what is going to change is the fact that DORA is lex specialis to the NIS directive and to the CER directive, so to the critical infrastructure directive, and this is very important for two reasons. First reason, because it will create an harmonized framework for operators, for financial entities in the scope of both regulations, and so they should have streamlined operations and streamlined compliance. So it should probably reduce the cost of compliance for those entities. And secondly, it will force at European and national level the dialogue even more between the cybersecurity supervisors and the financial supervisors, with the objective to maintain resilience. And last but not least, actually, there are a couple of very important points. First, DORA introduces a system of digital operation resilience testing, so threat-led penetration testing, digital hacking of the financial entities, with mutual recognition at the level of the EU. So it means that if a financial entity is tested, for example, in Malta, the results of this test will be applicable and reusable in Italy, France, Germany, and all the other member states. But also it creates oversight of the so-called critical third-party providers, which are those IT providers deemed as critical, which probably are the ones posing that systemic risk that may be the single point of failure we were mentioning at the beginning. So these are very important novelties which will create an harmonized framework and which will enable a more, let's say, risk-based and intrusive supervision of IT risk at the EU level.
In Europe, with cross-border business, the failure in one member state could result in failures in other member states. How will DORA ensure that there is cooperation between national competent authorities in the context of cyber attacks and the failure of institutions as a result of those cyber attacks?
So DORA requires financial entity and competent authority to share information about cyber attack, cyber incident, and it pushes on cooperation at national and European level. There is a requirement to share information on incident. We will create, although it's not focusing on cyber incident, a forum which will be a permanent committee of all the members to perform the oversight activities, and this will where we are going to have also the NIS authorities as members or as observers, and this will create this continuous dialogue and this continuous fertilization throughout Europe. So I believe the regulation gives us a number of opportunities of creating a community in relation to the IT and the cyber resilience risks. So and this is exactly what we are experiencing also now in the implementation. So we have created a great group of people, a great committee with more than 50 members. 50 authorities are members, between members and observers, including also ENISA, the authority for cybersecurity in Europe. And this is already creating now the possibility of sharing expertise, of sharing knowledge and asking questions to build a more resilience approach. And this will have, of course, an impact also on cross-border business. Specifically, DORA on IT incident requires the ESAs to distribute incidents with cross-border impact to the affected NCAs. So this is I believe this is a very good starting point to ensure a more resilient approach from an IT perspective, also in the context of cross-border business.
Technology, will you be using any technology in order to supervise or cooperate or share information?
Yes, the short answer, yes. We are. I don't have a specific answer telling you what is going to be the specific technology we are going to use.
But the plans are there.
The plans are there, yes. It is impossible to imagine sharing information about cyber incident in a reasonable amount of time to all the actors without leveraging on specific tools and specific technology. So yes, the answer is yes.
Thank you very much, Andrea. Alan, as I mentioned, we're moving from guidelines to a regulation.
Yes.
Regulation is going to be detailed with delegated acts, with technical standards. There is going to be an expectation on MFSA to supervise this area.
Yes.
What is the cybersecurity function of the MFSA doing at the moment in order to prepare itself for, first of all, guiding the industry
Yes.
with respect to implementation? But in addition to guiding the industry with respect to implementation, to supervising then day-to-day the actual implementation of
Yes.
DORA.
So at the moment, there is a lot going on from our function at the moment. So we're trying to reach out first and foremost to all industry stakeholders, and we are trying to segment our outreach in accordance to, for example, financial entities on a one-to-one basis. Then there are sectoral associations, professional associations, chambers, chapters, educational institutions. We believe a lot into starting disseminating certain knowledge at this stage. Also, for example, to university students, these people are going to be the people who are going to be part of the financial sector, or supervisors, the supervisors of tomorrow, ICT, third-party service providers, and other national public authorities, and other interested parties accordingly. But that is only covering the outreach. There are a lot of other preparations that we are doing, and probably the single most important aspect is people. You can't really supervise, be a supervisor of DORA without people. We're investing a lot in people. Over the last weeks, we have published a number of vacancies. We are almost doubling the complement of our function to be able to supervise the financial sector in terms of DORA, and we're also training and upskilling the current complement of people. There is a whole package of training that is currently being delivered. Then there is the legal aspect. As the Financial Services Authority, we're also heavily involved, of course assisted by our colleagues in other sectoral supervisory functions, and also our legal counsel. We are currently drafting the main legal instrument, which is going to implement the various legal discretions of the regulation, but also there are a lot of amendments that have been done to EU directives, which also these amendments need to be transposed at a national level. And a lot of work has been done already there, and we will be issuing a public consultation on that particular legislative pack. Reach out to public authorities. As Andrea well explained, the regulation will have a lot of exchange of information bilaterally with other public authorities, the National Competent Authority for the NIS Directive, which is also moving to NIS Directive 2. A lot is currently being done there to ensure that come 17 January 2025, we are coordinated, we are prepared with what is going to be needed. Our supervisory approach. So we're going to start supervising against a totally new regulation. But whilst there are certain requirements which have already existed, but we need to create new supervisory models. We need to be able to use our people intelligently to ensure that we have a comprehensive but also an effective coverage of supervision against DORA. And last but not least, we're currently preparing for technologies that we will be using to supervise DORA. If we had to mention two particular examples, there is going to be one technology for the reporting of incidents. Okay, we have something already. We intend to continue building on it, but also for the reporting of ICT third-party providers, which has to be done on a yearly basis. Of course, we will need whole new technologies for that in order to be able to deliver our obligations in relation to the regulation.
You mentioned ICT, both of you mentioned ICT third-party service providers, which is quite a good chunk of the regulation. There's a lot of emphasis there. I recall during a different event, we had a discussion. So is it supervision, is it oversight? And you emphasized this is oversight, not supervision. Although I beg to differ a bit, because if you see the regulation, there are many powers there which has granted to competent authorities, which are generally supervisory powers. But Andrea, how is there going to be a distinction between those entities that are going to be supervised at European level and those entities that are going to be supervised at national level? And in what way is there going to, are the ESAs going to achieve some level of supervisory convergence in this area?
That's a very good question. Yeah, I think it's $1 million question in a way, because it's the objective of the work of building up the oversight framework of DORA. So to create processes, methodologies, approaches which are valid at European level, but can also be replicated by competent authorities when they do their supervision, both of financial entities and on the indirect supervision of the critical provider. So this is for sure one of our objectives. The idea is to work with competent authorities, so to continue building on communities, to continue building on sharing experience, and to leveraging on what we already know as supervisory community. And believe me, it's a lot, because in several areas of the union there are real excellence in IT supervision, working performing tasks and activities which are very top notch in terms of quality. So we need for sure to build on this, and we need to build also on creating new knowledge, new skills, and new competencies to better understand, at least at European level, the business model and the capabilities of those so-called critical third-party providers. Because for sure it's going to be already a challenge to designate those providers. It's going to be a challenge to create the teams and to recruit the skills, but it will be also important, given the scarcity of resources, to focus on the areas which are really posing risks to the financial sector, that can really be a single point of failure and potential source of issues for the European financial stability when we set up the oversight framework. Otherwise, we could face the risk of focusing our effort in doing a kind of checklist-based activity. So this is a huge risk. As I said, how do we ensure a level playing field? This is a challenge, and we are developing on it. But I believe that the tools we have, let's say, the regulation gives us in terms of fora, and exchange of information, and the way of collaboration we are experiencing in working in the working group we have set up to develop the policy products on DORA, let me hope very well for the future. So.
But is my understanding correct? Critical ICT third-party providers will be supervised at European level, whilst those that are not critical will be supervised primarily at national level.
Yes and no. So I mean, the regulation introduces an oversight framework for the critical providers at the European level. That's correct. So it means that the set of IT providers which are critical at European level, applying the criteria of the regulation, which are basically in relation to the dependency of the financial entity and the size of and the interconnection of the financial system towards those providers, in terms of to designate those providers as critical. Those will be supervised, overseen at EU level. At national level, the regulation does not introduce a similar framework, so there is not a requirement or a direct requirement for the national authority to identify the critical provider at national level and to oversee those providers like we do in Europe. However, there is a specific recital in the regulation which in a way opens the door exactly to this activity and exhort national authorities to perform this type of exercise. And and the idea will be towards the sharing of information, particularly on the register of information, which will be the tool to be collected by each financial entity on their IT providers to build a shared knowledge, national and European level, on which can be those providers. And it will be very important that we apply rigorous and similar measure at both levels, so at European and national level, also to avoid, let's say, regulatory arbitration, for example. So that maybe you focus only on specific markets, you avoid to become too big or to, as IT provider, for example, not to be included in the oversight, or for the other way around, you decide to establish on a certain specific market.
Will there be some level of convergence? So in the sense, on the basis of this recital, will we have different approaches in different member states, certain member states taking the approach of doing their own national supervisory or rather oversight framework for ICT third-party providers in their jurisdiction, whilst others not, or having a lesser regime?
So as I said, this is something we are working on at the moment. The regulation, since the regulation does not foresee a specific.
Yeah.
It is at the moment left. This area is left open. It is clear for us that we cannot. It is clear for us that we need to have convergence. It is clear for us that we need to have a common set of supervisory tools and supervisory approaches to address the risks. Otherwise, we have the risk of having a level playing field. The way how we are going to implement the way how we're going to enforce the supervisory convergence is still to be defined, is still to be easy in the making, let's say this way.
What is the landscape with respect to the ICT third-party providers? How many are there in Europe?
We are talking about thousands of providers. So from different size, performing different type of capabilities, and it's also very, very important to notice that all providers are using other providers to deliver their services. So you have a number of software companies, for example, leveraging on infrastructure. So, for example, cloud infrastructure, but also physical infrastructure provided by a limited set of providers. So there is also concentration on that side, and it will be very important, and it is one of the requirements of the regulation to build a kind of value chain or IT service value chain and link between those providers, which at the moment is an information which, as supervisor, we don't have that clear. We have done some exercises as preparation of DORA, which enabled us to understand that the landscape is complex and that the landscape is different from member state to member state. There are some, say, European champions which are clearly identifiable, but as you know, the devil is in the details, and we need to build up this type of mapping to be sure we are grasping the IT third-party risk in a comprehensive way.
Thank you. And in terms of critical third-party service providers, approximately have you come to a number which will need to be supervised?
Not yet. Let's say it's very difficult to define the cutting point. So we are working now. We have been published as working groups, or as ESAs, a draft of our technical advice to the European Commission, better specifying the designation criteria. We published this draft technical advice in May. We ran a public consultation of 1 month, and we are finalizing this advice by the end of September. And also there we are recognizing that without data, it's gonna be difficult to say we are going to have 10, 30, 50, 100 critical providers. So we are, of course, given the scarcity of resources at our disposal, or at disposal of everyone, we need to focus on a limited number. But at the moment we don't have it.
So you mentioned now the level 2 framework.
Sure.
As part of your answer, Can you, for the benefit of the audience, explain a bit the difference between delegated acts, technical standards, and what is going into the delegated acts, what is going into the technical standards, and when should we expect to have sort of the final text of the delegated acts and technical standards for implementation?
Sure. So DORA is a level 1 regulation. It means that it is applicable law in all member states of the European Union, and it empowers the text of DORA empowers the Commission, the European Commission, to issue technical standards and delegated regulation. Delegated regulation have the same validity as a level 1 regulation. They are still applicable law at European level, and they are meant to explain two specific areas basically of the regulation. One area is going to be the designation process, so the criteria to be applied by the indicators and the criteria to be applied by the ESAs while identifying the critical third-party providers. And the second area will be the fees collection process from the designated critical third-party providers, because the costs of this oversight will be borne by the critical providers. And of course, there is the need of having a piece of regulation explaining how those fees will be paid. Then we are going to have technical standards. We can have regulatory technical standards, which are basically detailing from a technical perspective the principle-based requirements of the level 1 text, and implementing technical standards which are more instrumental for the development of reporting or reporting tools. So like for incident reporting, or for the register of information on third-party providers. Those in terms of timeline, we are having two major deadlines. First deadline is going to be 17th of January next year, 17th of January 2024, when we as ESAs, we need to send out to the European Commission the text of a number of those standards. Then the European Commission will have typically around 6 months to transform those standards, to convert those standards, so the draft standards submitted by us into applicable law, so to publish them in the official journal of the EU. And second deadline will be July 2024, when we are going to submit the second package, and then same will apply. In July 2024, the European Commission will also publish the delegated regulation for fees and criticality criteria.
You are the coordinator of the JST that is preparing all this work. What is the major challenge that the JST is facing at the moment?
Yeah, so what we have, let's say, also for the audience, just to explain what is a joint committee and what are we doing.
Please. That's very helpful.
The system of supervision at the European level is composed by three supervisory authorities: the European Banking Authority, European Insurance and Occupational Pension Authority, EIOPA, and the European Securities and Market Authority. In order to ensure convergence in common policies, common areas, the regulation creates a joint committee, which is composed by the chairpersons of the three European supervisory authorities, to ensure that basically cross-sectoral issues are implemented and monitored in a consistent way. As part of this of the work of the joint committee, we have created a working group, a subcommittee, which is called the Subcommittee on Digital Operational Resilience, tasked on implementing the policy mandate. In order to be successful in this implementation, we did two tasks. First one is we created a joint team of experts of the three ESAs. So we are working really together as one single team. We have we have set up exactly this committee with more than 50 members. The challenges here are several: governance challenges, coordination challenges, different culture, different approaches from different sectors. I would say that for me, we have two major challenges in implementing those technical standards. First one is to deliver technical standards which are applicable for big banks or big insurance undertakings, but also to smaller smaller actors of the financial sector.
So to achieve proportionality then.
to achieve proportionality, but also to achieve, let's say, the right level of abstraction in the rule, making them valid for such a for such a large spectrum of financial entities. So to be detailed enough to help the stakeholders in implementing the regulation on one side, but also to be flexible enough, proportionate enough for all the stakeholders. And this is for me one very, very big challenge. The second challenge is about the timeline of implementing. I mentioned the timeline 1 second ago. It seems long, but the European machine is composed by a number of actors and stakeholders, and delivering a piece of legislation in 1 year time or 18 months time is an extremely challenging process, particularly if it's done with such large committees. The largest committee ever created in the context of financial regulation in Europe. So those I would say so. Proportionality and governance timeline, these are the biggest challenge.
Thank you very much, Andrea. Alan, technical standards level 2.
Yes.
You're part of the joint committee, so you participate there. But from an industry perspective, how can the industry contribute to this process? And what are you doing in order to encourage them to contribute to this process?
Yes. So the first set of technical standards is currently out for public consultation until the 11th of September. Of course, the different actors, the different financial entities are encouraged to provide feedback because those technical standards, especially the regulatory technical standards, are as detailed as the regulation, or if not even more, especially on certain aspects. So, of course, now is the time to provide feedback on that, and we have reached out also to the industry to announce this important public consultation, provide the deadlines, and also, most importantly, the ESAs have conducted an event, a webinar, explaining these regulatory technical standards and also collecting any feedback during this event. So from our perspective, we are informing the financial entities of these events. We are informing the financial entities of the material that they need to go through and where they need to provide feedback. We're doing this publicly, but we are also reaching out to associations to emphasize the need to do this and to remind them of the importance to do this. So that is mainly what we have been doing in terms of outreach.
So, I mean, industry definitely have a significant challenge to implement DORA. Yes. And unless they implement DORA, obviously us as regulators, we will have to look into what they're doing and probably also in extreme cases take regulatory action. What are the powers which national competent authorities have with respect to supervision of financial entities, implementation of DORA? And what sort of enforcement powers are there in DORA for regulatory action by the authority if the authority comes across instances where financial entities have not taken the necessary actions to implement DORA?
So, from a supervisory powers perspective, it does not look that much different than the regular supervision and the way that we're doing supervision at the moment. So we currently have access to any document or data, and that is going to still apply.
Access to the premises, inspections, appointing inspectors,
investigations, summoning representatives, and all that stuff. That is going to remain. It is stipulated within DORA, and that is what we actually are going to do. Then there is the area, of course, of administrative penalties and remedial measures. And of course, the regulation provides those kind of powers as well. And that also does not look that much different than currently current administrative and remedial measures in place. So we can issue an order to cease conduct, terminant or permanent cessation of any activity, asking for any type of remedial measure, the ongoing aspect, require insofar as permitted by national law existing data traffic records, for example, in case of a breach, and also something that is already being done, issuing, for example, public notices. So if, for example, there is a breach, the regulation provides for that breach following a particular process to be made available publicly.
Thank you very much, Alan. Again, convergence. I know I'm sounding like a broken record. I'm constantly mentioning the issue of convergence, but if you see the history of financial regulation and supervision at European level, we've been speaking about convergence from the time of CSER, for example, the Committee of European Securities Regulators, where there were discussions on supervisory convergence, which became more intense then when we got the European supervisory authorities. And DORA is probably, DORA and the new legislative frameworks like sustainable finance frameworks, like the area of MiCA, are pieces of legislation where perhaps it's easier to achieve convergence because national frameworks are still in their beginning. They're not advanced like in more traditional areas of financial regulation, like prudential and areas of conduct. Is there a plan that eventually we will get some European handbook for the supervision of DORA, that we will have a European risk-based approach methodology for the assessment of risks of entities across Europe, to identify where we should focus more our supervisory engagement, or is this going to be done primarily at national level?
So we don't have, at least to my knowledge, we don't have a specific plan formalized, but the vision is exactly what you said. So we have to. So I strongly believe we have to work in that direction. So DORA is a cross-sectoral European regulation, which imposes requirements for entities and for competent authorities at the same way throughout the European Union, and we need to develop the supervisory capacity in an harmonized way. It would be really a lost opportunity if we don't develop, for example, a joint supervisory handbook, if we don't put together the experiences across Europe to let everyone benefit, for two reasons. First reason is because the resources and the skills to perform supervision on IT risk, they are not that vast. There are not that many as for other areas.
And at the MFSA, we say that supervisors don't grow on trees. So
true,
very limited. So you need to make sure that you use your resources in the best way possible.
But for example, I'm sure that on certain, for example, in performing penetration testing, not that many financial supervisory authorities are performing these tasks. There are very few. And it would be a pity not sharing the expertise, the knowledge, the challenges faced by the authorities who are currently doing it in building up these capabilities at European level. So let's say at the moment we don't have a plan written on a document which says we have to develop a joint supervisory handbook. But I believe this will be the trajectory of work. And so I can't tell you by when it will be there, but
the vision is there.
It will be there,
and it's interesting because this would be probably, to my knowledge, the first cross-sectorial supervisory handbook that we'll have in Europe. I mean, every ESA has its own set of standards for supervisory convergence, and in the case of EIOPA, you also have a handbook.
Sure.
In the case of EBA, ECB, they have several handbooks. But this will be sort of the first cross-sectorial, correct?
To my knowledge, yes. As I said, let's say there is not approved plan. So of course everything is
But we can
subject to.
propose it today during this.
It is, let's say, as I said,
During this podcast.
to my understanding, I think it makes super sense, and it would help us in maximizing the resources we have.
And it probably would help also Alan to request for more resources at MFSA to do more work.
Perhaps.
So, if I may, I think there is already a starting point in that regard. So, for example, the European Central Bank has this REP methodology. Of course, a lot of what goes on into that SREP methodology, if we speak about operational risk, or if we speak more specifically about IT risk, it is pretty much based on the same principles. So I don't think one would need to totally reinvent the wheel. So there is a mechanism which exists already, and I think we should start making use, or maybe we should enhance that as a good starting point for this kind of work.
If I may, I agree completely with what you just said, Alan. When I was saying we have, let's say, this is the vision, I was not implying we have to delete what we have now, but we have to build on what we have now and on the skills which are not that many around Europe. So I know that, for example, the SSM has developed very good manuals which they are using, and they're continuously improving to perform IT supervision. Of course, this should be the starting point if we are going to develop a shared handbook, for sure.
Thank you very much. Coming now to another very interesting topic, third countries. So will DORA have an impact on third countries? In the sense, for example, in the area of ICT, third-party service providers, is there a sort of extraterritorial dimension to it?
So also here, to give you a very quick answer, the answer is yes.
Yeah.
I think DORA is a very international regulation for two reasons. First reason is because it requires the ESAs and the supervisory community to stipulate memoranda of understanding and to create partnership with third country authorities, because the IT risk is a global risk. It's not a risk that you can size to a specific region or to a specific country. So it needs to be supervised at global level. And second reason is in relation to the oversight. There is a specific article, a specific provision which gives the power to the ESAs, to the lead overseer, to carry out inspections and investigations also on the premises in third country in case of needs, of course. So yes, so I believe DORA has a very international nature per se, and the risks per se have a global impact, and that's the reason also why many international organizations are working on this area at the moment.
However, with respect to ICT third-party service providers, is it correct that if they are critical but they have no establishment in Europe, once DORA comes into place and they are servicing a number of operators in Europe and they are critical, they will be required to establish a subsidiary in Europe?
Absolutely, yes. This is one of the requirements of DORA. So to make it simple, the moment a third country service provider is designated as critical, it will have 12 months to set up a subsidiary in Europe, which will be, of course, one of our counterparty in the oversight. And if they do not want to set up this subsidiary, they cannot provide their services in Europe. So, of course, there is a huge incentive to.
But what happens to the banks then and the other service providers if they decide not to
set up a subsidiary? There will be a phased out of the services from that specific provider. So supposing where you are using hosting on data centers of a third country provider, if this third country provider does not want to establish a subsidiary, you will have to migrate the workloads into another data centers.
And when the subsidiary is established, will it be subject to some level of oversight at the level of when it is being established, or the oversight will come after?
I am not sure if I understood correctly, but let's say the purpose of establishing that subsidiary
is to have oversight.
Is to have oversight. So yes.
So will there be some substance requirements? So this is what I mean. How will it work? Can it just be a company with a board of directors, letterbox, or does it have to have some level of substance and also operations in Europe?
We haven't. I can't give you a specific answer here. We are working on this. I can give you my view, which is maybe different than the view which we are going to implement. And my view is we have this company, this subsidiary needs to have a materiality and a substance, because we need to engage with this subsidiary for the oversight. We need to engage with this subsidiary to ensure that the risks the critical providers exposed into the European to the European economy or to the European financial sector are managed properly. So we cannot have a letterbox, or we cannot have a company with a single administrator as a counterparty. But of course, we haven't defined the corporate substance. But on the other side, we are not going to ask any. It also would be realistic to ask the critical provider to move their services, for example, from third country X to Europe because of the oversight. So I don't believe we can ask, for example, you need to have physical presence with X data centers in Europe, or with this, or servicing directly from Europe. But maybe it will be more from the administrative or governance structure. But of course, this is my idea. We haven't entered into that.
So to go back to the original question, as part of the oversight, will there be some authorization process?
The answer is no. So there is no authorization, and that's the reason probably what differentiates between oversight and supervision. In supervision, to be able to let's say to be part of to be a supervised entity and to sell your services to the market, you need to get a license. You need to be authorized by the national authorities or by European authorities in certain cases. In the oversight, it will not be the same. So that you will not need to be licensed to sell IT services in Europe. There will be a designation process. It means that you will be in a list of companies which will be subject to the oversight regime. But say there is no possibility for the European authorities to withdraw the license, for example, and so to avoid that the company operates in Europe any longer. In terms of measure towards non-cooperative companies, there will be, as a last resort measure, the possibility for Europe to ask national authorities to ask their financial entities to suspend or terminate the contract with that provider. So it's going to be a complex governance process as a coercive measure, or as in case there is no cooperation by those providers.
So it's going to be a learning by doing. So this is sort of a first step, I believe, given
Sure.
the implications that these critical ICTs, third-party service providers have on our financial system. Through experience, we might go to a more intrusive regime in the future.
So I don't have
I'm not asking a question, it's a statement. Let's put it this way.
I can agree. I mean, it's going to be, for sure, DORA is going to be a journey. So the implementation of DORA, not only for the oversight, I think also for the other areas of DORA, because DORA asks financial entities to create mapping of their, let's say, IT landscape and IT risks on an ongoing basis. And to do this, for example, they will need to invest on data. This cannot be one-off exercise. It's going to be a long journey. Oversight will be a longer journey.
And the more we invest
in
technology, and the more we become reliant on technology, the more we need to change sort of our regulation and systems of supervision to ensure that technology is robust.
Sure.
And that it does not impose threats to the stability and integrity of our system.
Absolutely. So maybe I should have said it at the beginning, but let's say my view in relation to IT risk, to make it very simple, IT is used by financial entities to deliver their services. They need IT to, like every organization of the world, to make business. And IT can, if IT doesn't work, you can have problems in terms of availability of the services. So you cannot perform activity because you cannot access, or you can have problems on the data. those are the typical type of disruption. Then you can have a number of factors generating problems like that. For example, cyber attacks. For example, problems in your internal organization. And the more we are dependent on IT, the more we are subject to those type of events. And the more we are interconnected, depending on the same providers, the more the risk of having events which are affecting the whole system are higher. And our objective is to learn how the system works and to be sure that there are the right controls and the right checks done by the financial entity and by the most critical providers to ensure that the likelihood that those events happen are minimized. Of course, we cannot have a zero failure system, that's clear, but the idea and the objective is to ensure that we have the secure system possible. If you speak with any IT security professional, Alan can say better than me, there is no
perfect system.
Exactly, there is no secure system. So by design, a system is breakable.
Yes, and that is why, of course, we need an operational resilience regulation, so that we ensure that the financial sector can continue delivering its services even if impacted by such kind of incidents.
But they need to invest, Alan, correct? They need to invest in having these proper controls in place and having proper systems in place to ensure cyber resilience. We've had experiences here in Malta of a few firms that have experienced failure because they haven't invested in proper systems and controls, correct?
Yes, unfortunately this has happened. Let's also not look at operational resilience only in terms of cyber attacks, because cyber attacks are just one form of incidents that can cause issues. You can have an operational incident that can, if you're not prepared for it, and if you have not done your homework before, it will take you a long time to recover and to resolve that incident. With regards to your question on investments, yes, I don't think we can say that DORA comes at zero investment. It requires investment. Of course, the investment is associated with your level of dependency on technology, the kind of technologies that you have in place, the business that you are into, how much interlinked you are with other financial entities, and how much these are dependent on your IT systems, how much your clients or your investors are reliant on you and on your technology. So that is subjective, but at least DORA sets out a common playing level field for this. Not every provision comes with a monetary investment, if we had to put it in money terms. There are a lot of governance requirements, okay, which really and truly requires policies and procedures. And it does not take a lot of money to do that. But of course, you need to have people, and you need to have technologies other than processes. So, and those will all come at a cost. So, yes, this is it. We are in the situation as Andrea explained. This is a journey. So, and the journey, it's very important, as it does not start in January 2025. It has to start now.
And I think we need to continue emphasizing that this is the time when you start implementing. Do you see how you're going to change your systems and controls to come in line with DORA?
Yes, but at the end of the day, so at the end of the food chain, I think that this is beneficial for everyone. It is also beneficial for the financial entities themselves. So we will all benefit from all this. We will all benefit from having secure financial systems. We will all benefit if people trust technologies and using financial systems, and trust the financial systems, and they trust the financial entities that they are doing their job in terms of ICT risk and cybersecurity.
Thank you very much, Alan. Thank you, Andrea. Just one last question. And I know it's a difficult one, but I would like to ask it for the benefit of our listeners, who will likely to be people from the industry.
Sure.
DORA requires an investment. There are various requirements that need to be implemented. Will it create situations of too small to comply and therefore companies having to consolidate with other entities to have the capability to be able to implement DORA?
This is a very complex question. I don't have data to provide, let's say to give you an answer. The idea of, but anyhow, I try. So the idea how DORA was built and how DORA is built, and Alan, I think he said very well, is a kind of proportionate by design, because the size of the investment you have to do depends on how your IT is structured, how many IT assets you have, how many counterparties you are servicing, how many IT providers you are using, etc. So if you are a smaller undertaking with a limited number of providers or a limited complexity, the cost of implementing DORA should be relatively smaller compared to an entity which has more, let's say, source of risks. So that's the idea on how DORA has been built. So proportionate by design. Of course, also it's important to say that DORA builds on a number of standards, IT standards, which are already available in the market since many years. So the principle of DORA, the principle of ICT risk management included in DORA are not new per se. So of course, investments done in the past can be very well capitalized and should be very well capitalized. In terms of consolidation, also DORA gives the possibility, let's say, to mutualize in a way certain type of controls. For example, incident reporting, it can be outsourced, for example, and certain areas of DORA also can be outsourced in terms of sharing compliance. So I expect, for example, in certain contexts like mutuas or like cooperative banks, where there is one single IT providers for multiple institutions, that this type of provision and this type of business models will be leveraged. Then too big to comply.
Too small to comply.
Too small to comply. Sorry, too small to comply. Let's say what we are hoping and what we are trying to do is that we are not going to see this type of effect. But of course, I cannot exclude it.
Thank you very much, Andrea. Alan, your closing remarks?
So from my end, in continuation with this, so micro enterprises are exempt from a number of provisions, and those are the most costly provisions. So yes, DORA is proportionate by design, but it also requires a change in mindset. But even downtime comes at a cost. So even if you can't deliver the services, that comes at a huge cost. So if you had to think about it from that aspect and from that point of view, most probably the investment that you need to do to comply with the regulation is far less than the money that you need to spend if you encounter a significant incident that can put you into a position that you can even go bankrupt.
Thank you very much, Alan. Thank you very much, Andrea, for joining us for this podcast. This is another podcast in a series of podcasts that we are organizing under the Financial Supervisors Academy to try and educate our industry and also to build capacity here in Malta in the field of financial regulation and supervision. So again, thank you very much. And I hope that we'll have another podcast on DORA, hopefully within 2 years, once DORA is fully implemented across Europe, to share our experiences in this regard. Probably Andrea and Alan will be much more knowledgeable with less hair on their head.
Yes, difficult.
It's difficult after all that work. So thank you very much. Thank you.
Thank you very much.
Thank you very much. Thank you.
Thanks.